Welcome to the Daily Update. This is being prepared Thursday, May 19th, where we'll look at the action in the market today and then see how things look for Friday, May 20th. And it was pretty negative overall. We did have a down day. We worked off a bit of the oversold condition, but yet since we still had a down day, there's other indicators that didn't get worked off being oversold and some more indicators that are suggesting that we might still be slightly oversold, but the overall environment tends to still be negative. Few things just to talk about before I get going. I'm trying a lot of different sound experiments with the audio. I've rearranged where I'm recording from. I'm trying to use some acoustic enhancing tools that are available to me. I'm using software to try to change things a little bit. Let me know what you think. Is it worse? Is it better? Is it about the same? Do you even notice it? That would probably be the best thing. It's like, oh, he's making changes and I didn't realize that. That's when something usually is good. But if you have any recommendations, please let me know, either in the comments or by sending me an email if you feel you want to talk to me about this. I'm trying different things with each video. So that's why you're seeing a lot of variation in the sound. And I'm just trying to work out what I think sounds good. But what I hear might be a lot different than what you hear. The second thing is I'm starting to add chapters to the YouTube videos so you can click to different parts. I was a little hesitant to do that because I know my videos are pretty long. I'm trying to keep them under 30 minutes. What I'm trying to avoid is, on one hand, somebody coming in and just saying, oh, there's a 30-minute video sitting right there. I'm just going to click to the end and see how this movie finishes, and then not really pay attention to the rest of the video. I understand that. That's what I'm trying to guard against, because these videos are designed as teaching tools. I don't make recommendations. I come to conclusions, but I try in these videos to show you how do I reach those conclusions. And then I want to help you develop the skills so you can reach those conclusions yourself, which may be slightly different than mine. Now, on the other hand, I do realize that you don't probably make decisions every day, but you like to keep up with what's going on. So you want to skip to the end just to get the overview and then go on from there. That was the reason for me doing the snapshot edition videos. Now, if you like those, if you like them a little bit shorter where I condense everything down and I really don't go through very many charts, let me know and I can easily bring those back. But I had a few people say, well, what are they for? We don't really need those. Where other people might be really relying on those. I want you to tell me what you want. I come up with ideas of what I think you want, and then I want to make adjustments going forward from here so that you're getting what you need from these videos. Then the other thing is, I'm trying to play with the mouse. I'm trying to use different things. But if you've used a mouse on a computer, which probably all of you have, but then you use it when you're recording a video, and it's like a whole new ball game. And I'm screwing it up, and you hear the sound that I feel like I'm a cat chasing a mouse sometimes. So bear with me on that. I'm trying some different things. Sometimes it jerks all over the place. Other times I move it when I record the video, but then I apply some tools to it, and it doesn't even move. And I'm trying to use a highlighter and all kinds of crazy things. So anyway, just be aware of that, and thank you for your patience as I try to work through that. And then another thing is, are people even going to the PDFs? The slides that you see right here, I make a PDF file. I upload to spxinvestingblog.com, but I'm not seeing a lot of traffic going there. It does take me not a lot of time, but some time to do that. And if people just aren't using that resource, I'm not going to waste my time updating it all the time. So let me know if you think that is useful or not. Okay, now let's get back and talk about Thursday. Right at the open, first of all, it was a very choppy day. We were up, down, up, down, up, down, which is not necessarily surprising. We saw a huge up day, over 2%. Then we saw an over 4% drop. So the market was just kind of wanting to take a breather a little bit, but it was still kind of volatile nonetheless. We did have a lower open, and we didn't quite get down to S1, which was at 38.73. Prices then bounced back to the unchanged level, which acted as a resistance level at that point. We were able to break through, and it looked like, okay, maybe we're going to try to go higher now. Prices did go slightly positive, but quickly ran out of steam. As the day went on, prices chopped around. They went negative again, then they went positive again. Going into the close, we saw some late day selling, which took things down a little bit. We ended up being down 0.58%, and volume was above average. What we're fixated on, of course, the technicals. They're still negative, but giving some oversold indications. Inflation and interest rates, that's driving the market right now, and I also added growth concerns. That's what you're hearing from a lot of companies. It's like, is the economy going to slow down? Are we going to have to cut back on things? People are saying, my gosh, look at what I'm paying for gas. Look at what I have to pay for food. I'm going to have to really do some cutting back. And then you're not buying as many things from companies, and that hurts their bottom line as well. So that's more of the, what do they call this now? The big keyword is, I think, demand destruction. I think I have that right. Of course, all the different geopolitical concerns. And it's my understanding that not only did Finland lobby to join NATO, but Sweden is also doing the same thing, which is not making Russia very happy. And then the earnings reports, which we deal with as they come out. What are some comments? The VIX was down again on a down day. And I have an interesting chart that I'm looking at that really told a story late in 2021, but I'm not sure if it's really helpful for what's happening right now. So I'm going to keep an eye on that. When I have some conclusions, I'll be showing you that chart. The yield curve from the 10 to the 5, it's back even. You're getting the same rate right now for the 10-year as you are the 5-year. Interest rates and stocks declined again. Fear remains really extreme. You've got a real fearful environment. And we're kind of camped out here, where usually when we see fear, it climaxes. It's critical mass. It's everybody's freaking out. It's what everybody's talking about. And then we overreact to it. We bounce up and go in the other direction, and then it goes away. Well, now fear's been hanging out for quite a while. The S&P, yes, is still in correction territory. The economic reports that came out, jobless claims were higher than expected, so that was a little bit of a concern, but we get this every week, and that's a pretty volatile number. The Philadelphia Fed index dropped to 2.6. They expected it to be 16.5. This is what gives that context. It was a lot lower than what they expected, so we're seeing some growth concerns there. The LEI that came out, leading economic indicators, it decreased 0.3% where they had expected it to be unchanged. Little bit of slowdown with growth, and then existing home sales fell 2.4%. Another part of the economy that might be slowing down, and that's producing what we're calling now growth concerns. Our trend is negative and getting stronger because we had a down day. Our bias is negative and our momentum is negative. Let's go in and look at the day's session. We are still pegged extreme, where we're reading 12 right now for fear. And here is to give you some historical context of where we're at. Other times, we usually don't stay at these levels for a long time. Yeah, we can come up and then come back down. But usually we have like a V shape. It comes down, everybody's freaked out, and then we bounce out of it. We kind of had that happen back in March, where we were getting extreme negative, and then boom, we took off and had that nice run up into the end of March. Well, right now, we're just kind of hanging out down here, and that's not typical. Another thing that came out is the active asset managers, their weekly survey that they did, and it just shows that they're freaking out with everybody else. It's really getting extreme negative, so now we're at the point where we might be able to use this as a contrary indicator. As the S&P has been falling, these active asset managers are decreasing their exposure to risk, which means they're selling stocks and getting things that are considered safer. But since they're human beings, they have a tendency to overreact as well. We also had the RIDEX bear-bull ratio. It shows that people that use those mutual funds, they're still getting into more of the bearish funds than they are the bullish funds right now. So fear is starting to spike up. And this is the interesting thing about the VIX. It fell on a down day. Here's the closing basis. We closed right near the bottom of the bar. So the VIX is acting kind of strange. The VIX of the VIX actually spiked up a little bit at the open, but then came down and we closed at the low. And on a closing basis, we also show a decline in the VIX movement. The Osler Index, this still continues to say that fear is justified. As it goes up, that means that fear is increasing. And here is the longer-term chart. Equity put-call ratio declined a little bit on a down day, but it's still very high overall. The 5-day moving average, it's kind of just ticking around at an extreme level right now. Our sectors, it was a down day, so I sort these according to what was down the most. Staples. And I'll have an interesting chart to show you later on. Tech was down over 1%. We had a few sectors that were positive. Discretionary, not very much. Healthcare and materials. And then showing how energy has been in the lead. I actually didn't go back enough days on this chart, but this still gives you the basic idea. Discretionary, comm, tech, financials, real estate, and industrials are all down in double digits since the all-time high. Our technical alerts mostly negative. The S&P had a BPI that crossed below 30. We were looking to bounce out of that. Nope. Last couple of days, we're turning back down. The S&P did cross below 3,900 there for a while. Let's see. That's pretty much it. NASDAQ was able to get back above 11.5. Tech had a BPI positive cross. Utilities had a bullish MACD crossover, so there were some positive things that happened. Intraday, way over on the right. I didn't say that we gapped down, but man, we sure shot down right after we opened. But we shot down right at the open. We did not get down to S1, which was at about 38.73. We came back up to the unchanged level. Looked like we might break on through to the other side, but nope, that wasn't happening. We fell back, chopped sideways, tried to break on through again. That wasn't happening, so we saw some late day selling and then just kind of flatly finished. It was not a real exciting day. We're still below the long-term support on the daily chart, and we are still declining. We have S2 below where we're at right now, and volume was above average. Possible support areas just to be aware of. I'm kind of honing in on this 50% retracement just because it's also an S2 level. When you have a couple of different measurements that come up with about the same area, that tends to be kind of big. For example, the long-term support area, that was also close to a fib retracement level. We're down 18.68 from the all-time high. Technical overview. No changes here, folks. Everything is still the same if you've been watching the videos. Negative. Also, still the same if you've been watching the videos, so I'll go through this pretty quickly. I have not done an intermarket analysis video, which I could do, but nothing has really changed. But if you still would like an update on that, let me know. I probably can't get to it until Sunday. But just let me know if you would like that. Our trend is still negative with the red line advancing and the green line declining. The red line's on top of the moving average and it is going higher. So we are in a trend. The Arun is still picking up where we were not so long ago, but it's showing a bit of a decrease in selling, but also a bit of a decrease in buying. So we're flattening out overall below zero, so that's negative. But it was pretty much unchanged. Breadth, still showing some weakness based on price and volume. The highs and lows, getting down to extreme negative territory, but we could spike down lower than this. The 10-day average, coming off of what had been potentially an extreme negative spike, so showing a little bit of improvement there. The advanced decline ratio has now dropped below zero and is turning down more negative. New highs, new lows, it was giving us some hope there, but now the moving average is starting to roll over, and the 10 period is rolling over already. Accumulation distribution, negative because we're below a declining moving average. Short term, McClellan oscillator, negative. Force index, negative, and really didn't change all that much. These are pretty touchy indicators, and to have them not change that much is kind of interesting. Stoke RSI, negative and not extreme. Williams percent R is extreme, but still negative, and it could still go lower. Moving average study, getting extreme negative on the 20 and the 50 and declining on the 200. Stochastic RSI, short term, oversold. Declining intermediate term, flat to trying to still go up here with the long-term stochastics. And then I'm just showing this because we've been bouncing around like a ping pong ball. We were extreme positive, then we went extreme negative. Well, we're settling down a little bit as far as how quickly things are moving. Rate of change 1, kind of showing the same thing. We went extreme positive, extreme negative. We're settling down a bit. Intermediate term, looking back 10 periods on the rate of change, still extreme negative. 20 period, extreme negative. Standard deviation, we're getting back close to the mean price here. So if we continue to fall, I'll probably take this chart down until it starts telling us something again. Momentum oscillator, we're actually seeing a turn up in the slope where the TSI is also trying to turn up, but our other oscillators are still failing to turn up or still headed lower. Vortex, increase in selling, a little bit of an increase in buying. The red line's on top, so it is negative overall. Sean trend meter, extreme negative. STO, a little bit of a decline, but still above zero based on price. The same thing based on volume. BPI, this is where it came back out and went above 30. Well, now we've dropped down below 30, so that is negative and pretty extreme negative. These are some of the slight oversold indications that we're seeing here. PMO declines, and then looking at it based on price and volume, they're also declining. The studies show we had a little tick up with the PMOs that are rising, a tick down with the buy signals, and we're declining with those that are above zero. Summation index, declining based on price and volume. Boom indicator, and since this is longer term and gets kind of jumbled up here, I put these little red arrows in here just to kind of give you a little bit better perspective. Where we are extreme negative measured against the 20 period moving average, where we're still declining on the 200. Shaken oscillator turned back down and is going negative. Ease of movement ticked up slightly. CCI, haven't shown these charts in a few days, but the 14 period is starting to look a little extreme negative, as is the 20 period. TTM squeeze kind of flattening out a little bit, but still negative overall. Longer term shows that we are coming off an extreme negative reading, but it doesn't seem to really matter right now. Chart variations, Heiken Ashi looking more negative, Kegi negative, Renko negative, 3-line break negative. Point and figure, no new signal was generated, but 3 new zeros were added after Thursday's action. Trading systems, negative with the elders on the S&P, as with the SPY. SAR continues to be negative. No go no, back to a solid purple now, so that is negative. Long term, we're below the 200-day simple moving average. I could just record that and splice that in to each video. We're getting extreme with our 50 period simple moving average study. We were down here before. We're also getting extreme with the 150 as well as the 200. So we're seeing some oversold indications, but we're not seeing a real washout with fear. It's just camped that everybody's freaked out right now. The special K continues to decline. This is one I haven't shown in a while. This is a weekly chart, and so I do bring this up in the weekly video. This goes all the way back to the COVID low, measures to the all-time high, and then how have we retraced since that time? We're coming down, and we're close to the 38.2% retracement level. We want to keep an eye on that. That would be at about 38.05. If we start breaking down below that, that could be significantly negative. Diamonds, negative. Qs, negative. Vixen also closed well off the high on the bar and actually declined. overall on a down day. Looking at our broad measurement of highs and lows, we're getting more back into a neutral territory with these right now. When we drop below the red line, that's when we really notice this. The dollar really been getting hit lately, and I posted something from IsabelNet a few days ago that showed other times when the dollar spiked and then really bad things happened after that. Have we spiked with the dollar? Is it getting ready to really start to tank from here? We've seen declines before, but we just want to keep an eye on this. Even though the uptrend is still intact, maybe we've hit overhead resistance, but we were down over 1%. Oil was up slightly to 109.89, still very, very high. Gold coming back up to the 200-day moving average. And we were actually able to get a little bit above that with the GLD ETF. And here's a longer-term view. Silver also had an advance, but is still way far below the moving averages. And here's a longer-term view. Bitcoin is just kind of camping out. A little bit below 30, a little bit above 30. I think I checked a little while ago before I started recording. I think we were a little bit above 30 at that time. You got a lot of people that are just kind of really waiting to see what's going to happen right here. Bonds had a little bit of an uptick. Could we start to be seeing a bounce? If this starts to go up, that means that interest rates will be coming down. I just wanted to show the 10-5 yield curve because it's registering zeros now. They're both at the same rate. We are seeing a decline in interest rates, which is not really helping out stocks these days. The Japanese yen, it is bouncing a little bit, as is the euro. The dollar is declining a little bit, but is still in an overall uptrend. The euro is now at 105.86, where the dollar is at 102.75. Getting a little further apart again. This is the chart that just is very interesting because back in April, we saw an inverse relationship. Interest rates would go up, tech stocks would go down. We're almost seeing the opposite of that, and this relationship continues. We're seeing interest rates going down and tech going down together, and so they have a highly correlated declining relationship. Possible positive scenarios. Choppy curve, after trying to turn up, is going back down right now. The 2-year Treasury yield, have we topped out here? We don't know. We declined a little bit on Thursday, but we have to see, is this going to be some kind of a spike? Mass index still has not generated the second part of the signal. Bottom fisher trying to turn up but has not crossed. Small caps, we're seeing a little bit of a breakout here. We want to see, is that going to advance on Friday or very, very soon? That could potentially be positive. Again, the idea behind this, and we saw this in March, is if we see a real breakout in the ratio between small caps and the S&P, if we see a breakout of the red line where it's starting to shoot higher, we might see a breakout with the blue line, which is the S&P. This is looking a little bit more viable. We've seen a real decline in the ratio between staples and the S&P. This is the one I was talking about earlier. Have we spiked out here? Okay, if we have, we want to see some follow through with price. We're not seeing that. We're still declining in the S&P. But this could be starting to happen. So then what's our outlook for Friday? Technicals are negative. There's some oversold readings, which may produce some kind of a bounce. We still have the growth and value battle that goes back and forth day after day. There's no economic reports coming out on Friday. Russia, Ukraine, positive or negative. China and the supply chain, that could be lessening. Inflation, interest rates, and then growth concerns. I've added that to the overall scenario. Oil, we want to keep an eye on. Earnings as they come out. Fed folks that speak can either help or hurt things. And then the longer term situation with Japan. What are our scenarios? We are still down. Rising interest rates, inflation fears, and growth concerns could keep things going down. Earnings, if they're really taking as negative, and negative Fed speak. The technicals are showing that the path of least resistance continues to be down, even though we're showing some oversold indications. What could make things go up from here? The technicals are negative with some oversold readings. Sentiment is still extreme negative, but we've been kind of camped out there lately. Possible positive scenarios. The only one that's looking kind of viable right now is the staple spike. And we want to wait for more confirmation for that one. The technicals, they're not really helping us because they're overall negative, so we have to rely on pivot points, previous support, or resistance levels nonetheless. And I just abbreviated S and R, that's support and resistance. Sideways, we're not sideways because the ADX is still above 20 and showing a negative trend. So what's our conclusion? Overall, the S&P remains negative. Short term, negative, slightly oversold. Intermediate term, negative. Long term, the same thing I say every day now. We are negative because we're below the 200-day simple moving average. So thank you very much. Have a great Friday, and I'll prepare the video for Monday as soon as I'm able to do so.